Welcome to Bloomberg New Economy Gateway Europe. The world reglobalizes. I'm Eric Schatzker. Over the next half hour, I'll share with you highlights from the inaugural Bloomberg New Economy Gateway Europe, which we held just outside Dublin, Ireland. Our program was built around the theme of reglobalization, and we looked through that lens at issues of importance and urgency to Europe, including trade, energy, finance, and transportation. We drew on insights from leaders in politics, business, and regulation to help build clarity and understanding around the ongoing war in Ukraine, the persistence of high inflation, and the potential fallout from legislation such as the U.S. Inflation Reduction Act. But let's begin with the Taoiseach of Ireland, Leo Varadkar. He spoke with Bloomberg's Stephanie Flanders.
We've modernised and reformed our corporate tax laws quite a lot in Ireland over recent years because we want to stay inside the international framework. We're not a tax haven. We don't want to be perceived as a tax haven. So we've got rid of things like stateless corporations. We've got rid of things like the double Irish. We closed a lot of loopholes that existed. We're now increasing our rates. And every time we seem to do it, more money comes in, whereas people expect less money to come in. But someday that will happen.
If you start boasting about that at international meetings, I think everyone's going to start hating you. But so there's been a lot of conversation this week about the US and China, how Europe is able to position itself. Pat O'Donoghue talked about it last night, the importance of engagement with China. We have seen, not just in the remarks actually, but in the response to President Macron's remarks about China, that these sort of differences in tone and approach among different European countries towards China can really unnerve people. How important is it, do you think, for the Europeans to have a united sort of view on their strategic approach to China?
I do think President von der Leyen puts it very well in saying that our objective should be not decoupling, but de-risking. So Chinese investment is welcome in Ireland. Trade with China is very important. We don't want to enter into any sort of political conflict with China. They're a competitor, they're also a partner, but we do need to bear in mind that there are potential risks, and that's around certain raw materials. We don't want to be overly dependent on any third country for raw materials that are essential to us, certain products, and also certain security issues.
It's another area, though, where you may end up having kind of unexpected consequences from the fact that the European Union is not a unitary state. You have individual countries reassessing their national security and potentially economic relationships as a result of that. And that's not something that's technically in the purview of Brussels. So do you think there's going to have to be some adaptation around that?
Look, it is difficult to do. We have a common foreign and security policy, but it's done by consensus in reality, not by majority vote or by QMV, and I don't see that changing anytime soon. But when faced with challenges, Europe has come together, I think, better than people thought it would. Has really come together over Ukraine, has really come together when we had to work together on the pandemic, particularly when it came to procuring vaccines and so on. Really worked together when it came to Brexit. People were surprised at the level of solidarity among 27 member states. So I think we can do the same on China.
Actually, Europe is much more unified, and it's also becoming a security bloc, which I think is very interesting. And so from my perspective, I am very optimistic about the future for Europe. And it will, financial services is changing, business dynamics are changing, but there are opportunities around every corner.
The European Union has stuck together. It stuck together on Brexit, to the benefit of Ireland in particular. It stuck together on the pandemic. And it also has stuck together on Ukraine. If you look at the progressive rounds of sanctions, if you look at the fact that some important kind of crossing points have been forwarded. For example, the EU is now agreeing to supply weaponry and ammunition to Ukraine, as something that would been unthinkable a few years ago.
So I think the challenge for the European Commission is more effective regulation. Refocus your efforts, the Commission needs to refocus its efforts on improving the single market and making Europe, the lives of its citizenry in Europe better, and that's ultimately the way to prevent further departures like Brexit.
Now, there's multiple ways to ensure supply chain resilience. It could be multi-sourcing, which is one of the things that we deploy the industry does. So multi-sourcing for the same medicine, for example, you can source part of it from China, you can source part of it from Europe and US, for example. We've got the largest part of our manufacturing footprint in Europe, per se, and here in Ireland. In terms of a specific country. So I think it's really thinking about that supply chain resilience around multi-sourcing, being able to co-locate capabilities in more than one country, if you will. Not so much around localizing the entire supply chain in China or in the West or whatever the case may be, but continue to leverage that globalness, capabilities, and scale.
I do think what we are going to find is that outside of a very few industries and sectors, governments are not going to be willing to subsidize indefinitely production that brings it home or brings it to allies. And so the benefits of international supply chains that we've seen over 40 years, from economies of scale, from specialization, from innovation and the like, those aren't going to go away. And so if you don't have an international supply chain, you will be beat out by competitors who do.
The other thing I would say on this is that there's a lot of talk about the Brussels effect, about the fact that, because we're a big market, we can basically, just export our regulatory model when it comes to the green transition, for example, or other areas. I think we are very conscious in the EU that we have to continue to engage in international regulatory cooperation. That is the one way that it will enable us to avoid trade and investment tensions further down the road.
With eyes wide open, I support a resetting of the mission and mandate of the WTO. In doing so, I am deeply conscious of the many current challenges to world trade, the complexity of finding a collective way forward. But this is a journey we must take. The challenges, the problems, are the calls for help from the world and are the learning opportunities of our time. The member countries of the WTO have always shown great resilience in seeking to find a way forward. Enabling this new area of world trade will require cathedral thinking, cathedral ideas. The WTO can be a cathedral organisation. It can be enabled by its member countries to advance sustainable world trade to the lasting benefit of future generations. When relationships veer off course, you must always strive to find a new pathway so that you can create the new mutually beneficial alliances. Now we must dig deep. Now we must find the courage to travel the hard road. At the core of future progress will be empathy, the openness to understand the perspectives of others, the willingness to build the relationships of the future. We must find the new ways to embrace that which unites us.
Coming up, more from Ireland, including Philip Hildebrand, the Vice Chairman of BlackRock. This is Bloomberg. Welcome back to Bloomberg New Economy, Gateway Europe, the world reglobalizes. On day 2 of our event here in Ireland, Bloomberg's Francine Lacqua spoke with BlackRock Vice Chairman Philip Hildebrand. The former head of the Swiss National Bank had a lot to say about the recent volatility in finance, which of course reminded us all of the 2008 crisis. Take a look.
You were instrumental in 08-09 in putting together the government response at the S&B, also to get UBS through turbulent time. What was March like, seeing Credit Suisse just disappear?
Well, it brought back a lot of bad memories, personally, obviously, although it's quite a different story. Back in 2008, it was really kind of a surgical strike. There was a cancer in the balance sheet, which was well-defined. Turned out to be 40 billion of bad assets. And we came in with the help of the government as a central bank and basically took it out. So it was a kind of, think of a cancer surgery, you go in, it works, successful, and it's over. This was much more complicated in that it was a kind of a slow burning, I would say, probably the best way to describe it would be loss of confidence in the business model and probably also in management. From what I know, and obviously only from outside, in 2008 we had the benefit of having been added in terms of preparatory work much longer. This was a really hard one to tackle because it came quickly at the end. It accelerated very, very quickly within 1 week. There was enormous pressure given where the global system was to come to a solution essentially over the weekend. So I think given all that and given where the authorities were at that point, it seems to me that the government in particular has done a very good job, not just for Switzerland itself, but also for the global financial system. And particularly, I think, a full resolution, at that point, given where the system was at that point, would have been extremely delicate. So I think the government handled this as well as you could have. The question now will be, how does this settle? And how does UBS position itself going forward, given quite intense political discussions in Switzerland around competition, around size, and many other issues. So, this story is not over, but the emphasis has now shifted to what UBS is going to do with it, as opposed to what the government did. And I think the government handled it under very difficult circumstances very well.
How will UBS do it?
I don't know. I think, as always in life, particularly when you face complex things, it's all about execution. You can talk about difficulties all day long, but in the end, you have to execute. This will be a big execution story. I think it's a culture story. The chairman of UBS, rightly in my mind, has indicated that these were two very different cultures, which makes any merger is difficult or any acquisition is difficult. When you have two different cultures, it makes it more difficult. So it's mostly going to be about execution. And then I would say wisdom in terms of how they handle which is admittedly a national discussion. It's not really an international problem, but a very intense national, very emotional national discussion around this very large bank, this single very large bank that's now in the country, in a country that has always historically had several large banks. That's a big change for the population, for politics, and we'll see how UBS handles it.
There's 130 countries in the world that are looking at pulling together a central bank digital currency. The cash that you're holding in your wallet today, they want to tokenize. And they're going to issue it to you through the central bank. And the ECB, specifically in Europe, wants to do this direct to consumer. There'll be maybe intermediaries that kind of facilitate those transactions, but they want to cap how much you can hold. They will have access to the information around where you were and what you did and what you spent your money on. They can tell you what you can spend your money on. You can buy that, but you can't buy that. So ultimately, the financial system is moving toward tokenization, whether we like it or not. And so I started by saying we've got optionality, we've got choices. And so the more choices, the better, that allow us to transact how we want to transact. But the idea that everyone in this room isn't going to have access to, potentially forced to use, a digital wallet at some point, would you rather use an asset that provides some level of privacy and control, or do you want to use an asset that's given to you by the government that, the country that you live in and told how you can spend your money?
Silicon Valley Bank failed on a Thursday night. Within a couple of days, Credit Suisse had been forced into a shotgun marriage with UBS. How long after that, and of course Signature Bank also failed that Sunday night back in New York, how long did it take before you felt like everything's going to be okay?
Well, I think there is a general question that any times you dent trust and confidence into the system, then you worry. Because at the end of the day, banks are built on the trust and confidence. So that, for me, was the key issue. Is the broader market not understanding exactly what triggered the situation going to say we have another 2008 and therefore all the banks have the same issues? And the market reaction was exactly in that direction. But when you look at the issues that triggered that, at least, for example, in the US, liquidity, interest rate, mismatches, and we just could not be doing that even if we wanted to, and we do not want in Europe. So it does not apply. What applies is a read across that affects confidence. So let's say that we were convinced that we were in a solid position quite quickly. What we were worried about is the contagion by the lack of trust, of confidence. I think that the ECB just keeping its direction with rate increases.
Not blinking.
Not blinking, authorizing us to distribute 3.35 billion of share buyback to our shareholders. That's about 10% of our market cap, kind of underscored with facts that the situations are very different.
I grew up at a time that was in 2008, right, when the US was actually entering a recession, right? So we had a very strong focus at the time on fundamentals in businesses, meaning companies that were either profitable or had a path to showing profitability. What I saw in the last decade, maybe in the last 5 years particularly, was sort of an abandonment of that focus as companies were chasing sort of hyper growth for extended periods of time. What I think the collapse of SVB means is a lot of investors are going back to those fundamentals and looking probably with higher scrutiny today than they were over the last few years for businesses that actually have demonstrable proof of a profitable revenue plan and profitable growth.
Coming up, more from the Bloomberg New Economy Gateway Europe, including Kurt Sievers, the CEO of NXP Semiconductor, on the push for European leadership in technology. Welcome back to Ireland and Bloomberg New Economy Gateway Europe, the world reglobalizes. I'm Eric Schatzker. The U.S. Congress has been busy passing bills to subsidize the development of advanced chip production and clean energy technology. Europe was caught off guard by the size and terms of these programs. But Kurt Sievers, the CEO of NXP Semiconductor, told me Europe and the United States can and perhaps should work together.
The West is trying to starve China of advanced chip technology, and meantime, you have Europe with the CHIPS Act, the European CHIPS Act, and the United States with its own CHIPS Act competing with each other for chip-making capacity by offering tens of billions of dollars each in subsidies for fab construction. Is this a turning point?
That's a big question. Let me try and parse it, Eric. So first of all, there is no digital without chips. And I emphasize that because everybody speaks about the digitalization of the world. And I would even go a step further. There is no Green Deal without chips. So yes, it's a bit like the new oil for the world. And given some of these geopolitical tensions, especially between the US and China, it's become a necessity, I believe, to be more resilient against these geopolitical tensions. And while finding it out the hard way through the past 2 years during the pandemic, and what I mean with the hard way is that we've all seen how key industries in Europe and the US, especially in the industrial, medical, and automotive sectors, have suffered from a shortage of semiconductors, it became painfully aware how much we all depend on semiconductors. I mean, I've been in this industry for 30 years now, and 27 years of that period, I could never talk with my friends about what I'm doing because nobody knew what chips are. Now everybody does, and again, from a painful way. Now, coming back to the CHIPS Act, I think it is late, but it is good, very good and very needed to do this. But there is a few attention points, and you mentioned one of them. The one you mentioned is, I think it would be fantastic if there was a lot of synchronization between the US CHIPS Act and the European CHIPS Act in terms of what to support, such that it will be complementary. I see this as one Western world, which should be combining the funds almost in order to create the best together. I mean, the US has 50 plus billion. We just signed yesterday the 43 billion euros in Europe. Mind you that in the end, it is big money from a government perspective. It is little money from an industry perspective, which means we have to spend it in a very dedicated and very well thought through way in order to get the best out of it. I'm not saying it doesn't happen. So I think you were overly critical in your question. I would say we have to make sure and pay attention that it does happen more and more going forward.
We're using advanced AI systems to uncover new solutions to problems that we don't fully understand or that we think may never be achievable. We've worked to and use AI to help control the plasma of nuclear fusion reactors, which is an important step in the safety of making this a viable solution. So I think there's a lot of things that we're seeing, and generative AI in my mind is really just the first rung on a very long ladder. I think it's exciting to think about the potential, and again, the reason I joined DeepMind was thinking about what future I want to hand my children and the generations that follow, and I believe AI can help us create a better society.
If you want society to embrace technology and to trust technology, you need to have that social contract with society. And if it's necessary to put more guardrails, to put certain mechanisms and principles in place, and this is what we want to do in the AI Act, you need some sort of clear principles and mechanisms, not just to regulate the next big thing that is coming, but that will be foundational for the technology under which whatever you want to create that has to do something with AI, you need to abide by those basic principles and mechanisms.
Last year, we did a study on aviation, and we also looked at how we can keep the aviation sector below 2 degrees. And Willie mentioned a lot of the same findings that we had. It's going to be a lot about sustainable aviation fuel. It's going to be about improved efficiencies, and it's going to be about zero emission planes, which I think we're going to hear a little bit more about shortly. And the exciting part for us is that we have identified a pathway that is feasible. Now we are going to need government regulations, and I think it's kind of interesting. You look at what's taking place in Europe and you look at what's taking place in the US, and they're kind of going on 2 different pathways. Let's start with the US. We've heard a lot about the Inflation Reduction Act. The Inflation Reduction Act is really about incentives and subsidies to bring the sustainable aviation fuel using government money, and that's going to probably get us displacing about 10% of our aviation fuel by about 2030, something along those lines.
But from Rolls-Royce's perspective, yeah, we've got a number of really exciting technology projects. We broke the world speed record last year with an all-electric plane, single-seater, but it's the world's most powerful battery ever taken to the sky. So really proving the potential of some of that technology. We are working on some hydrogen projects as well, which I won't go into in too much detail, but again, we've tested a gaseous hydrogen engine actually. Again, operated as expected, no real changes needed, which is pretty key in an industry that's so heavily regulated and relies so much on certification. No changes, sometimes a really, really good thing.
Here is where data is very important. Eurocontrol did an excellent study. If you banned all flights in Europe, every single one below 500 kilometers, you would reduce the number of flights by 24%, but the impact on CO2 is only 3.8%. So I think when we're making these decisions, we need to understand, what is the impact of the decision going to be? And we need to be honest with people. If you banned all short-haul flying in Europe, say 3.8%. If you introduce the single European sky in Europe, which is technically possible today, you would reduce emissions by 10%. So there are steps that we can take, and we need every single possible contribution to get to net zero in 2050. But I'm very clear that from an industry point of view, we can do it. And you will be able to continue to fly between now and 2050. And in 2050, this industry will be at net zero.
That's all from Bloomberg New Economy Gateway Europe, The World Reglobalizes. You'll find all our panels and interviews at Bloomberg.com and on the terminal. I'm Eric Schatzker. This is Bloomberg.